Let's talk about how you can make millions of dollars with real estate 1031 exchanges over the course of your career. This could very well be the greatest gift that your government wants to give you. It's where you can effectively make all of your investment real estate capital gains 100% tax-free. Let's look at how you do this. Yes, this is a great gift, and I recommend that you accept it. It can make your real estate portfolio explode, much like Mentos in Diet Coke, and it can soon have your friends comparing you to real estate barons like Sam Zell and Leonard Cohen. Hi, I'm Keith Weinhold. This is GRE. Let's get right into an example of how one works. All right, so let's say that on the date of May 1st, you sell your $200,000 single-family rental home that you had 50% equity in. All right, so you've got $100K of equity there. Within 45 days of that sale date, let's say you identify a $400,000 duplex to roll that 100K of equity into. Well, within 180 days, you need to buy the duplex, and let's say you use that $100,000 for a 25% down payment on that duplex. You sold a single family rental, you've replaced it with the duplex. Wow, let us just start to count the benefits of you doing this. First of all, and the point of a 1031 tax deferred exchange is that you're going to owe zero tax on your 100K gain, because let's say 100K was your capital gain, your appreciation on that single family rental property. If you did not do an exchange, you would owe between 15K and 29K as a capital gains tax. You'd also owe back depreciation recapture from the depreciation that you were writing off on that single family rental home every year. Now, there are some caveats around this. This is certainly a simplified example. Before I outline all of your other benefits from you doing this, go ahead and put a like on this if you like learning about something new, about how a 1031 tax deferred exchange can make you millions over the course of your investment career. I'd really appreciate the like. Now let's look at the other side of this. I think that a scarce mindset would say something like, well, hey, I've gone from only having 100K of debt on this single family rental over to now I would have 300K of debt on this duplex. Aren't I tripling my debt amount? Yes, in a sense you are, but remember what's really important. On a cash flowing rental property where income meet or exceed expenses, that mortgage principal and interest payment throughout the life of the property, that is completely outsourced to your tenant. They take care of that payment for you. Let's look at the other benefits that you have from doing this. You've increased your leverage ratio from 2-to-1 on the single family rental up to 4-to-1 on the duplex. The overall value of your real estate portfolio grew from 200K to 400K, a greater amount that can appreciate over time. You've increased your velocity of money. You've kept it moving along because the return from home equity is always zero. This makes sense. The amount of cash flow that you have often grows. Now you have more property and you've doubled your tenancies. And because you've doubled the amount of tenants you have more stability. If you would have had one vacancy in the rental single family home, your income is zero. During the period of time where you would have one vacancy on the duplex, you still got 50% of that income. You've got more stability now. You're also borrowing more cheaper dollars as interest rates are still historically very low. And understand that you did not lose any equity in this transaction. You had 100K of equity in the single family rental, and now you have 100K in the duplex, although you might have a corner chipped off for sale costs on the rental single family home. This is how you make millions by growing and expanding your portfolio continually over time, rather than just keeping one small property and trying to get it paid off. That's not a wealth generating formula. It's kind of old fashioned. In fact, it was old fashioned and a slow way of growing even before inflation was higher than interest rates like it is now. Compound interest is slow when you look at how compound interest works in the real world, about how compound interest is degraded by inflation and emotion and taxes and fees and volatilities. You're increasing your leverage ratio here from 2-to-1 to 4-to-1. That's how wealth is built in the real world. You're getting return on both your money and a return on the bank's money that you've borrowed, payments of which are outsourced to the tenant. Now, in my first ever 1031 tax-deferred exchange, I traded away 8 doors. I sold 2 fourplex buildings, and I traded up for 2 larger buildings and went to 19 doors and got a lot of these same benefits that I just talked about. I mean, this is really a big part of why I always say that financially free beats debt-free. You're moving away toward debt freedom and toward financial freedom as long as you increase your cash flows. But you need to understand that Uncle Sam does not grant any extensions to those aforementioned 45-day and 180-day deadlines in doing a 1031. So you really don't want to be off on a Caribbean cruise on like the 44th or 45th day of your 45-day identification period. You might miss out on a beach day in St. Lucia. Not that I would know for any reason, but the benefit is great. In fact, in my real estate investment career, I have never paid one dime of capital gains tax. I keep taking that equity and rolling it into more and larger properties. That's the wealth building formula. And throughout your life, there is no limit to the number of times that you can keep deferring your taxes and rolling it up into more and larger property. So though it's called a tax deferred exchange, technically, effectively, it is a tax-free set of exchanges because there is no limit to the number of times that you can do it. And then upon your death, the basis of the property steps up such that your heirs don't have any tax liability either. Yes, the 1031 tax deferred exchange has more longevity than Tom Brady. It has been around since 1921, so I don't think we need to fear that it's going to go away anytime soon, although the 2017 Trump Tax Cuts and Jobs Act did cut some related provisions. And again, as I mentioned earlier, this is for investment property. The 1031 exchange does not apply to primary residences, and 1031 is just the name of the IRS code section where this is stated. You might also see this called a 1031 like-kind exchange, since you're trading up properties that are similar in kind, also known as a 1031 tax-deferred exchange. They're the same thing. So, you know, there's always uncertainty in the world, and now is no time that's different from any other. So you can do something here that's controlled by you, something that you're actually in charge of. Now, if you're not yet in position to accept this greatest gift, now you know what to anticipate. Importantly, you need to have a plan. You need to have a qualified intermediary. On the day that you sell the property you're relinquishing, which is a $200K single-family rental home in this example, you can't take and touch the proceeds of that money and then say you want to do a 1031 exchange. So on the day you sell that single-family rental, those funds go off to a qualified intermediary, otherwise known as a QI, and they hold those funds until you're ready to go ahead and buy your replacement property, which would be the duplex in this case. The QI holds onto that money. And the crazy thing is, you got to be careful. The QI industry is underregulated. You need to be sure that you have a reliable custodian. Some have been known to take the money and run. Now, there is a QI that we have used here successfully. They've been good at handling documentation requests, and they also have low fees. They've successfully been used from beginning to end. They've been around since the 1950s. They even have a team of CPAs on staff. If you want to get started with them, you can start at the same place where you find properties as well, and that is at gremarketplace.com. That's where you can find our trusted 1031 exchange provider if you don't know where to start, or you can also just create a login and go there directly, gremarketplace.com/1031. I hope you better understand, again, just sort of the highlights, the high points, and not every little detail about the 1031 exchange. That's how it works, that's what to avoid, and that's how you can make millions using 1031 exchanges over time. My name's Keith Weinhold. Thanks for being here, but you weren't here for me, you were here for you. I'll see you in the next video.